So, greetings everyone. I'm Noel DiCarlo from Warshaw, DiCarlo and Associates. For those who don't know me, we are real estate and estate planning attorneys with offices in Boston and Lexington, and we work in all of Massachusetts and the islands. Today, we're going to be talking about buying, selling, moving, and financial analysis during the global pandemic of COVID and how COVID has affected those aspects of what everyone here in this panel does and what many people are continuing to do despite the pandemic. So let's talk some positive news first. We always like to hear some positive news. Current mortgage rates are below 3% and have been below 3% for over 6 months, averaging around 2.73. Refinance applications are hit an all-time 11-month high point. But with even though rates are pretty stable, there are some signs of volatility in the near term. And Nora Yousif is going to talk about that and talk about the economic outlook. While many cities and states are struggling, Massachusetts and Boston are not one of those states and cities. And Collin Sullivan will, I'm sure, dive deeper into market conditions. But we still have a record low inventory. We have record low contract periods. And it certainly doesn't hurt that Amazon just added 3,000 jobs in the seaport, which Eve is going to tell you requires a lot of people moving. But despite all this positive news about our market and our state and our city, we are still faced with challenging moments, and it's challenging in novel ways due to this pandemic and how the pandemic has affected the various industries. And so luckily we have an esteemed group of panelists who are going to discuss how to continue succeeding in the process in a streamlined way despite these novel challenges. So what I'm going to do is I'm going to present you the 3 remaining panelists in the order in which they speak, and then we will start with Collin. So Collin is a realtor with William Raveis Real Estate. Eve Ward is a moving concierge with Bond and DeVoe, and she'll explain about all the services that she provides. And Nora Yousif is a financial advisor with RBC Wealth Management. And then I am, as I mentioned, Noel DiCarlo, a real estate attorney, estate planning attorney at Warshaw, DiCarlo and Associates. So actually we have 2 more people we're going to admit. Perfect. So without further ado, I'm going to hand it off to Collin Sullivan, and Collin will talk about the current market.
Sure. Thanks, Noel. Thanks for organizing this whole thing, and thanks everyone for joining us. Much to everyone's surprise, 2020 has been, in spite of a pandemic and partially because of COVID, an incredible year for real estate, not just in Boston, but throughout the country. My brand is City to Suburbs, and what I do is connect people in both markets. I used to live in Wellesley and Needham and started my career out there almost 20 years ago, and have continued once I transitioned into the city to help people in both marketplaces. Whether they're looking because of COVID and looking for more space, an outdoor space in a yard to get out into the suburbs, or whether it's someone who's downsizing and facing those challenges of leaving a house that they've been in for 25 or 30 years, thinking about coming into a market like downtown Boston, Back Bay, South End, Beacon Hill, whatever their choice is, waterfront, seaport, helping them understand the challenges of what it means to go from a 3, 4, 5, 10,000 square foot house into a significantly smaller, sometimes condominium or townhome. So that's one of my fortes in real estate that I think sets me apart from a lot of other agents who specialize in one particular microcosm of a zip code. And my brand, City and Suburbs, allows me to do that. And having lived in both marketplaces, I think it's a perspective on helping people make those challenges. But back to the market in Boston, people have really reassessed, I think, what's important to them, especially being captive for going on a year now. And they've looked for things in proximity to parks, open space. If they're in the city, something that has a deck, a garden, a roof deck, somewhere where they can get outside beyond those 4 walls that may be only 700 to 1,000 square feet. And I think that has prompted a lot of people to make the move to the suburbs. You've probably heard stories about bidding wars which continue. And that is still going on in almost all price points in the suburban markets, people fleeing towards what they think is a lifestyle. We think that's sort of short-lived and that there will be a major return to the city. So there's actually some great buying opportunities in downtown Boston from some of those early movers that have left. And as Noel mentioned, with incredibly low interest rates, there are some real opportunities to get into the Boston market, which may not have been available a year or 18 months ago. One of the things that I do, and I think is unique in a market like Boston, there are several throughout the country, New York, LA, Florida. I have entree into a growing area of off-market listings. As one of the top producing agents in Boston, I subscribe to several different portals that allow top agents to interact with each other, share inventory that may not be on the multiple listing service. You won't see it on Realtor.com. You won't see it on major agency websites. And I think that's powerful. If you're looking for something special and it's a place in Cape Cod, if it's a small starter home in Wellesley, Weston, Wayland, Winchester, or if you're looking for something particular in Boston, I have the ability to guide you into something that may not be available to the general public. And those off-market websites have become very, very important. Some of them are by invitation only, and some of them are subscription, as I mentioned. So that's another added layer of helping someone as a buyer. There is very little inventory right now in Boston and the suburban markets. We're still in what's referred to as a seller's market. In most areas of New England, certainly in Maine and in South Florida, there's very little inventory. Strong buyer demand is still out there. As Noel mentioned, historically low interest rates have really fueled bidding wars. And we see that continuing through the first and second quarter of 2021 at least. Some quick statistics just to think about in what's happening. And I know people involved in finance like Nora is going to talk about what to do with your money and interest rates and investing. Real estate has been an incredible investment long-term, certainly. In a 12-month comparison from January 2020 to January 2021, average sale prices in places like Connecticut up 24%, Massachusetts overall 15%, Maine 15%, New Hampshire 14%. Rhode Island, 16%. Vermont, especially Stowe, Vermont, and the ski areas, 19%. And I've had some interesting conversations. And something that was really surprising to me is already high valued markets like Palm Beach County in Florida is up 24%. Think about that equity increase in 1 year. And your stock market portfolio may have done the same, and Nora will talk to you more about that in investing. But real estate long-term is certainly a great place to put your money. However, what this means to buyers looking to get into something is that you may not be able to purchase the place you want just by going in and writing an offer. You should have a buyer's agent on your side. You should be working with someone who is well connected and can assist you and hold your hand. It's a partnership. It better be somebody you like because you're going to spend a lot of time with them, and it's intense. It can be very stressful going through shopping for different things and knowing that there's multiple interests in a particular property. One thing that I always say, and I put in all of my social media posts, is representation matters. I learned that a lot the hard way in trying to buy my own first home and had a terrible experience, which is one of the things that led me into representing my clients, thinking there's got to be a better way to do this through transparency, through sharing of information, and through holding somebody's hand through that. It really is a partnership, and it's always a fluid conversation. So if you want to buy something, work with a great buyer's agent. And I've learned some tricks and developed some things over 2 decades of how to write and structure offers for people beyond dates and dollars. There are some ways that you can offer things in an offer packet that's not always the highest price that will still help you get the house. You need to be pre-approved before you start going out and shopping for a property. I call it purchase power. We need to know what your purchase power is before we go out and hit the pavement and start doing either public open houses, which are very limited right now due to COVID, or private showing appointments. Last thing you want to do is get your heart set on something and then realize mortgage-wise, maybe that's out of your reach. As a seller, thinking about putting your property on the market, it's important to work with a strong listing agent. What I do with my clients is meet with them, walk through the property, and have a really strategic eye about what buyers are going to pick apart. Sometimes it's months and months of advance work before we're ready for professional photography. It can be something as little as a fresh coat of paint, sanding the floors, to an entire bathroom or kitchen renovation, which seems daunting to a lot of people. The company that I work with is William Raveis Real Estate. We're very well known for high-end and luxury property from Maine to Florida, and we have a program called Raveis Refresh. I, as a listing agent, can help you manage a small project up through a major new roof or a kitchen or bathroom renovation. And that is no cost to you as the seller until we get to the closing table. Whatever money you decide to spend, I help you manage the renovation. And then that money to any contractor or painters is deducted from your net proceeds. So that's a wonderful way if you're sitting on a property that has developed a lot of equity and is equity rich, but you may not have the cash on hand to fix it up before going to the market. We can explore avenues like that. One change that I think has become important too is days on market. People are very, very keyed in now to how long your property is on the market, and you only get one chance to make a first impression. So it's worth doing those months and months of advanced homework and legwork to make sure that your curb appeal is top notch. When buyers walk in, they judge instantly. It makes a mental imprint, and they walk away, and that's what remember. You can tell them, oh, this is easy to paint. You can get rid of the purple walls or the black bathroom in a weekend, but they don't listen. They only judge on what they see. We also have a division called Coming Soon, where we can post a property on our website and it's available to the public before it's ever launched on the multiple listing service. And that has received some great reviews. I just want everybody to know that there's a lot going on in the marketplace. There are great opportunities to both buy and sell. If you're in a market where the demand is really high, you can probably get top dollar for your house. Make sure you're working with a great agent, and I'd be happy to give you any details that you want at the end of this webinar, or you can contact me personally. I look forward to assisting all of you. Thanks so much.
Thank you very much, Collin. I appreciate those insights. And that was a very nice summary of the services you provide and where the market is for buyers and sellers. I'm going to now hand it off to my co-panelist, Eve Ward from Bond and DeVoe. So, okay, Eve, you're up.
Thank you so much, Noel. I appreciate it. And I appreciate all the time that you've taken out of your day, everybody else, to spend with us this lunchtime. So I really do move right after the Realtor. So now you're all excited and you're thinking, well, okay, this is absolutely fabulous. I'm going to buy a home. I'm going to sell my home. The Realtor has given me so much confidence. And now anything is possible. Oh, but hold on, I have to move. So, you know, when I'd like you just to think about when you visualize your home, what that really means when you're thinking about moving, and whether that fills you with joy and excitement, and what fills you with that joy and excitement, or is it really, well, now we have to start packing? And one of the things that we are move planners. We will plan your move. So when we talk about concierge moving, it really is that we hold your hand and give you peace of mind all the way through the process. And one of the first questions we always open with is, tell me about your last move. And one of the things I was extraordinarily surprised with when I first started to sort of move into this industry, because my background is actually with Fidelity Investments. I was the head of risk management for Asia. So I'm fairly risk adverse, I think it would be fair to say, or I like to understand the risks. And one of the things that sort of baffled me is the lack of regulation within the moving industry. And people would say, well, you know, I had an ambiguous quote. I thought I was paying X and I ended up paying Y. And nothing fills you with more joy than knowing you thought you were paying one price, but at the end of the most stressful day of a period of time, you find that actually that price has doubled due to packing material that you're not really completely aware of. So I think it's really, surprising to me that, I was not the only one that had experienced sort of this situation when people come to move. And I think more than ever, though, it's about respecting your home, because whether you're moving out of a home or whether you're moving into a home, this is your home. This is everything that you surround yourself with that means a lot to you. And I think it's understanding who's coming into your home as well. So it's also sort of interesting that when you request a move quote, someone say, I don't need to come to your home, just tell me how many bedrooms you have and tell me what the square footage is and I'll give you a price. No, this is my home, so please come to my home, have a look at the items that I have, and then please give me a quote. So what at Bond and DeVoe, and we take care of all of that for you. So whether you're looking for a fully curated move, so we really manage your move from the day you decide to move to up and to including the day you're settled into your new house, or you say, well, Eve, I'd rather just a supported move. I'd rather that you recommend the movers. We get 2 quotes. We feel comfortable with those quotes. We negotiate those quotes. We understand what's in the quote. We understand the insurance piece. Now, whether you're moving, whether your home contents, and this is a monetary value, not a sentimental value, maybe worth 50,000 or up to 100 million. The insurance piece is extraordinarily important. So it may be with some clients where they have artwork that it's covered by their own umbrella insurance of transportation, or we understand what the insurance is with the move company, and really due to the lack of regulation, the insurance that you have with the move company is very, very limited. So it really is sort of a human process of putting your items into a truck, making sure they're wrapped properly, but things happen. So I think the insurance is really that added peace of mind that is so important. So as part of the curated move, we move with you right from the start. So we really do think about curated moves as let's only touch an item in your home once. So let's think about, as Collin said, where you're moving from and where you're moving to. So let's get the floor plan of potentially, if you're going into a 2-bedroom condo from a 5,000 square foot home, let's think about what's important and what are you taking and what will fit where. And we'll work that through with you, because sometimes it can feel entirely overwhelming. And when you think about whether you're going to donate items, whether you're going to sell them, whether you're going to keep them, it really is important to make a plan. So you make sure that everything is accounted for. Just the item is accounted for, but also you've had the conversation with yourself about whether that's coming, if it's not coming, why it's not coming, and really understanding, why you're going to sell something, donate something, keep something, or heavens above, we trash it. But that really is the last sort of the last call. So, somebody recently said to me, Eve, I have asked many, many times if little Johnny or Jimmy would like my dining set or my china. And they just say no. And I think, well, like all of us, we're all very busy during the day. And it struck me to ask how they were asking little Johnny or Jimmy if they would like these items. And they were just calling them saying, I need to get rid of this china set, please take it. So actually what we have done, we've worked with some clients to actually ask them to write a letter to their family member explaining why it's important that they take the china or the glasses. And I'm sure that there are some children out there somewhere very happy that they took the cut crystal glasses, because they're very in fashion again now. So you never know when these things are going to come back. So, it really is, dear Johnny, I have this china set. We got it for our wedding gift. It was very important to us. And it's very important to me that it stays in the family. We really need to be sort of open to communicating exactly why this means a lot to us. So I think when you start to make piles as we go through this, thinking about what you're going to keep, what you're going to donate, and who you're going to donate it to, and the tax reasons, then we come up with a complete plan. And the wonderful thing about Zoom, and I'll touch on the pandemic very briefly, is that Zoom video calling has become very instrumental in our business and changed the way that we do business. And we also have a video forever of your home walkthrough if you would like to keep it. And it really helps us plan better with you so you can make the move on each item, and we go through each room, including the new floor plan and what will fit where. And so you just have this level of comfort. But also, one of our clients recently described us as having a personal assistant through the most traumatic few months of their lives. And they could just call, text whenever, and nothing is a problem. Really, anything is doable. As long as you're not operating on someone, as long as you're not, trying to be a lawyer when you're not. We're not running money for people. We are moving people. We're just we've seen it all, we've done it all. We know how to be efficient, and we know how to make sure that we background check people. We know how to make sure that you're getting the right deal for your moving, and also not just the right deal, but the right service, the right respect during your move, and making sure that you seamlessly arrive in your new home and making it an enjoyable adventure versus something that, make it something you're excited for. So that's me, Eve, at Bond and DeVoe. If you're wondering where the name came from, I used to live near Bond Street in London and DeVoe Road in Hong Kong, and I moved here from Hong Kong. So Bond and DeVoe. So if you need any further information, please, I'd be happy to chat. And thank you very much. And back to you, Noel.
Thank you very much, Eve. And I have to tell you that I have sent many clients to Eve, and they have all thanked me profusely for connecting them with Eve. That they report back that she just made what could have been a stressful period in their lives so streamlined. She attacked every problem, every issue. She works with a lot of international clients and clients who live out of state, so moving people interstate or intercountry, she just takes care of. And what I also like is that she sticks with the clients after. A lot of them end up feeling like Eve is her friend. I mean, is their friend, which she probably is. She's also great with a lot of my sports player clients who have to go back and forth with spring training, and they trust her implicitly. So I can't speak more highly of Eve and her services. And I feel the same way about all my panelists, including Nora, who I'm going to ask to pull out her crystal ball. And given, how calm everything politically has been in this country, I'm going to ask her to make some predictions, which, should be relatively easy, I think. So I'm going to ask her to unmute herself and put her right here in the spotlight.
Thank you, Noel. Thank you. Yes, the crystal ball, I hid it because, I have to keep it under wraps. So thank you. I'm for those of you who I don't know, attendee-wise, I'm a third-generation financial advisor, and I help empower people through their investments, their financial planning, and help you make smarter major life decisions. I comment frequently for television on Channel 5, NECN, Yahoo Finance, and host hundreds of events around the Boston area. So what I'm going to do is give a little backdrop, as Noel mentioned, and I'll also share some very common questions that I get from clients related to real estate that you're likely are having. So my job is not to predict the future, but to rather help you see the future with clarity. So if we peel back all the impeachment, GameStop, and other noise, the fundamental backdrop of the US economy is solid. In fact, we're projected that we could be back to pre-COVID levels in third quarter of this year as the virus continues to get tamed through vaccines. Jobs are back. We're halfway home of what was lost. Stimulus helps those that were adversely affected. The Fed, which we'll circle back to, keeps pumping money into the economy. And us, the consumer, we are the richest we've ever been. And us, the consumer, our consuming, our spending is a crucial component of the overall economy because we drive 70% of it through our spending. And our incomes are going up, We've got pockets full of money here with money to spend because there haven't been many places to spend it, let's face it. And we're also, perhaps most importantly, feeling very good and optimistic about our wealth, with the real estate and the stock market being at record highs. So yes, I hear the fears of and questions of, are we in a bubble? Are we at the height of the bubble? And to that, I would remind you that bull markets are born in pessimism, they grow in skepticism, and they die in euphoria. And I would say we are far from a euphoric state with all the uncertainty of the path of this virus and inflation concerns. And this applies to real estate and the stock market. So sure, there's pockets of exuberance if you, again, GameStop or the FANG stocks, but pockets don't equal a bubble. So now to shift gears a bit when it comes to real estate, I gotta say we've got a beautiful housing formula teed up. And no, Collin didn't pay me to say this. There is not much supply, plus rates to borrow are low. Now, when it comes to the older population, I see this with my own clients. So very common conversations we're having are, should they retire sooner, especially if they're a teacher or in healthcare? I'm seeing that happening. Others holding on and working later because they figured, hey, this work from home stuff ain't so bad. There's no terrible commute anymore, not as much travel. And the other very common conversation is about them being in a holding pattern about their move, whether it's an upsize or a downsize because of COVID health concerns, which will subside, especially as the spring rolls around and that J&J vaccine is ready to inoculate most of the population if all goes according to plan by April 1st. And a little key statistic here is 80% of the deaths that are coming from COVID are from the population that's 65 plus. And they make up about 16% of the population and households and homes. So that could be a real turning point when those fears have subsided. Another turning point, well, could be in the spring, specifically March to June, at about when 1.5 million households will have their mortgage forbearance come to an end. That could mean some moves that are coming up in the springtime. Plus, as I mentioned, money is cheap. Interest rates are low, as Noel mentioned at the top. And the Fed is saying they're going to keep rates low this year, likely until 2023. Now, it could happen sooner, sure. However, I want to be clear that the Fed is likely not going anywhere fast with these rate hikes. Before they start raking up the hikes and making money more expensive to borrow, they first have to stop pumping all this money into the system. So that comes first, and then come the rate hikes. Now, what is the big elephant in the room that could perhaps accelerate their time frame? Anybody want to guess? It starts with an I. You can shout it out or put it in the chat. Starts with an I. What was that?
Inflation.
Inflation, correct. Inflation is the big elephant in the room. Now, the Fed isn't completely blind to this. They're expecting inflation. I mean, after all, if you've been a business owner or a restaurant, closed all this time, you can finally open up, and you have a line out the door, why wouldn't you raise prices? So it's almost inevitable that prices will increase, especially for travel. The question is, will it be something that's transitory? Will it be here for only a short period of time, or will it be here to stay? So if it's here to stay for a longer amount of time, well, what bodes well during inflation? Commodities and real estate. So for those of you who are considering a real estate move, I would say getting ahead of that inflation will bode well for you to have already made your purchase and have that value go up for yourself. Other common questions that I'm getting from clients, okay, I'm going to shift gears here. One is, how do I reduce my taxes when I sell? Question we're all interested in. Well, there are a lot of tax strategies. I want to clarify, I am not a tax professional, but I have a black belt, so you can say, when it comes to tax. So consult with your tax professional on these specifics. But here are some common plays that can perhaps apply to you. One is, when you're selling, the profits you make, You of course have a credit of $250,000 or $500,000 if you're married, where if you make any profits above that $500,000, then you pay your capital gains tax. But anything below that, you don't have to pay taxes on that profit. Another nice little item I want to mention is defined benefits. Now, these are like retirement plans on steroids. I'll give you an example. A client of mine in Nantucket sold his property, and he had about a $900,000 profit. Not a bad problem to have. It was a lot of taxes. And so to help reduce that tax bill, what we did is we put about 300,000 of that profit into what's called a defined benefit plan. It's a retirement plan, okay, and which he wanted to have money saved anyways. And that helped save him about 100,000 that he would have had to have paid in taxes otherwise. So just know there are a lot of ways to minimize your tax bill, and that applies if it's an investment property or corporate real estate. Other ideas, 1031 exchanges, just real quick, know those apply to investment properties, not residential. Another common question I get is, can I still deduct my interest if I still have my property? Now, of course, you want to plan to retire and not have any debt, but if you do still have interest, yes, you can still deduct it if you itemize. If you got your mortgage before December 14th in 2017, you can deduct your interest up to about $1 million on debt, even if you refi. Now, if you got your mortgage after December 14th, 2017, you can still deduct that interest, but only up to $750,000 of debt. Okay, just want to clarify that. There's a lot of myths going on or about that. Lastly, I'm going to end off answering the last very common question I get from clients when they're making real estate moves, which is, how is this going to affect my bottom line? In other words, if I upsize, can I afford it? Can I afford the second home or this larger home? How will it affect my big picture? If I downsize, what does that mean? What kind of options does that give me? So I will share with you a story of my client of mine. We'll say her name is JoJo. She's a real client. I've changed her name. She had, as a quick example, $2 million of investments and savings set aside. She was a widow, 60 years old, living in Wellesley, and needs about $100,000 to live her life the way she chooses to. That's $100,000 after tax, okay? For her to continue to travel, spoil the grandkids, and go about her way on her terms. Fine. Now, for what she has and what she wants to do, I did the numbers out for her, and I highly recommend you arming yourself with answers and running the numbers, or working with someone like myself to run the numbers for you, because the numbers don't lie, okay? And so ultimately, she couldn't retire until she was 69 to be able to afford what she wants. She wasn't crazy about that. She also recognized she's got this big house. It's not being used. It's more house than she needs. So we ran the numbers on her selling her home and going to a smaller home. She'll unlock some equity. For her, is about $500,000. So we add that to her picture. And how does that change things for her? Well, it means she doesn't have to work till 69. She actually only has to work till 64. Nice. Or she wants to continue working to 69 if she chooses to. It would allow her to have essentially an extra $2,000 to spend a month. Now, what we ultimately decided in our conversations is somewhere in the middle of her retiring at 65, 66, and having about an extra $1,000 a month. So I share that story just to give you an idea of the kind of clarity you can have and the kinds of questions you should have answers to before you make any major decisions. So if any of you want any of those numbers run for you, I'm happy to. I don't charge for those strategy sessions, and I will end off there. So thank you, and I'll turn it back to you, Noel.
Thank you very much, Nora. Always so insightful, as per usual. And again, just like Collin and Eve, I've sent many clients to Nora, and they've been so incredibly pleased. And when I say she goes above and beyond, I mean, I had 2 elderly clients who Nora said, Noel, I live near them. I can take the documents to them and get them signed so they don't have to travel into the city with COVID. So these are the sort of extra steps that go beyond just her expertise and her education. And so we appreciate you and that, Nora. Okay, so I am going to just, let's be honest, the legal aspect isn't the most interesting of the aspects, but it is an important aspect. So I'm going to give you a brief summary of how the industry has been affected by the changing environment. So on the legal side, we work hand in glove with all of our teammates. Our teammates are our client's financial planner, our client's realtor, their moving concierge, their mortgage lender. And our job is to sort of quarterback the process and work with all the teammates so that the process is smooth and streamlined. And as well, you can't always prevent problems. You can try to make them resolve in a faster, less stressful way. So how do we do this? Well, particularly given the market and that buyers are essentially giving a vial of blood or their firstborn to get a home, we discuss with them, and we love to sort of speak with our buyers before they start the process so we can have these discussions in a non-stressful, non-time sensitive situation. But we discuss with them what are some of the things they're going to have to do to become competitive in the market. So Collin said, what is your buying power? So we want to make sure they're working with good lenders, not some of these internet lenders who, quite frankly, give a lot of bait and switch programs. We want to make sure you're with a solid lender who's giving you a realistic program, who can perform in a timely fashion and not say yes, 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 and then when you have an offer in place, not be able to perform. So we put you in touch with the right lender. We want to have you understand what it means to have shorter time frames, because to make your offer competitive, perhaps you can't have 2 weeks to conduct due diligence on a home or 2 weeks to negotiate a purchase and sale agreement. Now that's happening, and I've been getting purchase and sale agreement dates within 3 days. We also discuss what it means to waive your contingency. A lot of clients come to me and say, Noel, as an attorney, what do you think about me waiving my home inspection contingency or my finance contingency? And of course I say, well, as an attorney, I want you to have as many contingencies as you can in your offer. I want you to make it contingent upon everything we can think of to avoid all your risks. But if you do that, you'll maybe buy a house in 2025. So we want to make sure that you understand that, yes, there's a risk in waiving certain contingencies, but to be competitive in this market, you have to understand what that risk is and be ready to take it if you really love a house. And having a good team around you can say, yes, waiving your home contingency, your home inspection contingency may mean that you are going to be taking on a repair or repairs that you weren't expecting, but perhaps we can do a pre-offer inspection if that's allowed. Or, this is, one of the major towers in the city that was built in the last 10 years. And perhaps in looking at meeting minutes of the condo association, we can see that it's very well run and very well maintained. So you can sort of understand the risk and say, you know what, I feel comfortable taking on that risk because I really love this house or I really love this condominium. Same thing with financing. Certainly, if you need a loan to purchase a property, although there are many cash offers in this market, how confident do you feel that you can nevertheless purchase, even if your loan officer or your lender, for whatever reason, doesn't provide you that loan? And working with a good lender is the key to this. You want to make sure you're working with someone who has reviewed extensively your finances so they can say, you know what, even if X, Y, or Z happens, you'll still be able to afford this house. Because you have to account for the fact that furloughs may continue to occur, decrease in salaries may happen. So you want to say, if the inevitable, if the unexpected happens, what are those parameters and will I still be able to afford this house? And then you may feel more comfortable waiving that inspection contingency. Likewise, you can say to your loan officer, I'm putting in $1 million offer on a $900,000 home. What are my parameters if it doesn't appraise for you not providing me the financing? And having a good loan officer, they will help you troubleshoot that and therefore make you maybe more or less comfortable in waiving your contingency. So understanding what it means to waive your contingency as a buyer, as a seller, it is understanding and making sure that if a buyer waives their contingency, that they cannot therefore find another way to back out of the offer, which unfortunately has been occurring in this market. I have seen a lot of bad behavior in the last year with buyers and sellers that I hadn't seen in, my 15 years of practice ahead of that. I think people are getting frustrated with the market, with perhaps being stuck at home, with having to homeschool, with a variety of things. And it's sort of coming out in unusual ways. And I have seen buyers who have no home inspections towards, closer to the closing date, say that they want money off for inspectional items that they should have been aware of. And so while I can always say, well, they have no legal basis for that, or your contract protects you, at the end of the day, you still have an issue or a problem that you need to deal with. And being able to troubleshoot that by first and foremost having a really good contract to protect you, so that to be a really strong basis to say, we're not talking in theory you have no legal claim. I am showing you in a very well negotiated contract that protects my client that you have no claim. Again, doesn't solve the problem, but then being able to take it from there and troubleshoot and work with people and see what the real reason is, and find a way to move forward in the transaction despite this sort of unusual sort of lack of good faith behavior that we're unfortunately seeing more often than not. Another thing that we've been doing is we've been accounting for some delays that are a result of the pandemic. So if someone all of a sudden has to go into quarantine, or the movers, they couldn't book movers on time, or the town or city is not able to deliver the documents needed for the purchase to occur because of delays related to the pandemic, but you have a contract that says you need to perform by a certain date, I need to build in the ability for you to extend it if you need to because of delays related to the pandemic. So as part of my role in the industry, I'm a board member of the Real Estate Bar Association and one of the co-chairs of the Conveyancing Committee. Conveyancing is the practice of buying, selling, and refinances. And we draft forms that are promulgated throughout the legal industry. And we have drafted and forms that are riders, we call them the COVID riders, although they do cover acts of nature, acts of God, force majeure. And so it's a rider that says, look, if it's not anyone's fault and it's related to these things, we're gonna build in an automatic extension. And it's not gonna just be for the buyer, it's not gonna be for the seller, it's gonna work for both people. And let's be reasonable, let's understand that everyone's going through this, and we're not gonna try to keep your deposit or not allow you to buy the house because you were in quarantine and you couldn't go anywhere for 5 days, okay? So having that language in the agreement is so important. And when we figured if a pandemic was unexpected, let's expand it to other things and just cover our clients and give them a little bit of breathing room so that they know that people are going to be reasonable and work together, okay? And then the other thing that is sort of new or novel in the legal world, in at least the real estate legal world, is the ability to conduct closings virtually through programs such as Zoom or Microsoft Teams. This is something that was not allowed in Massachusetts for the purpose of, the reason being was because you cannot notarize virtually. Notarization has to be an in-person event. You need to be sitting in front of the person, having asked them if they signed freely and voluntarily as their free act and deed. You need to view an ID if you don't know them, or attest that you know them personally. And that's a real in-person activity that Massachusetts, both land court and the legislature and case law has said cannot be done in any other fashion, although many other states have allowed it. And so it's something that has sort of been discussed as a trend that may change or may within the Commonwealth, but Massachusetts hadn't gotten there. And then the pandemic hit and people said, I'm not going to an office to close. I don't want to be in front of people. And as part of my role in the Real Estate Bar Association, we worked with our lobbyists and various interest holders in the market and the Senate and the House, and drafted some emergency legislation that allows for, on a temporary basis until at least the state of emergency ends, remote notarization. And it is not so easy that you can say, well, we're just going to go on Zoom, sign paperwork, and send it back. It is still intended to protect the consumer. We still want to make sure that people are signing freely and voluntarily, that there's no one on the other side of the screen saying, you better sign this, that that the consumer is still protected in the process. So this temporary legislation, which we've used a tremendous amount during COVID, has a lot of safeguards, meaning that you really need to be working with an attorney who understands how to comply with the emergency legislation, and who are doing all the appropriate steps, including recording the video session, having the notarial clause reflect that it's being done in this special way, because this is going to be, for example, on the deed to your home or on your mortgage. So what you don't want is for someone to look to contest this down the road because you had an attorney who was not familiar with the process and compliance. But that has also been a way for us to be able to continue having our clients purchase, sell, or refinance and still feel safe. It requires a lot more work and energy and effort, but it is an option for a lot of people that a lot of people have utilized. And that is really it. We always say that when you buy or sell a home, this is one of the largest assets generally in your portfolio. And that is not the time to be skimping out on hiring the right professional for a couple $100s. It's the time where you want the right professionals in your life to make sure that things go well. And I hope you see from our panel of experts today that we are the group that can help you. So on that note, I'm going to add my co-panelists back in, and we're going to open it up to questions. And I'm missing Nora. Here we go. Okay. So if you have a question for us, you can just go ahead and unmute yourself or add yourself or type your question into the chat feature. Also happy if you want to share any experience that you or your clients may have had and how you sort of dealt with it during in a new or novel way. We're always looking to hear how people have been troubleshooting their own issues. Well, I think
we answered everybody's questions.
I was going to say we were just so thorough. I'm very happy to report that, or they're just digesting the massive amount of information their way.
Yeah, it was a lot.
Eve, do you have sort of, I'm curious with you because I've noticed a lot of my clients having trouble finding movers or movers being late, and we're having to do use and occupancies at the last minute. What has your experience been with the move? And, or do you have such a great relationship with your movers that they've been very reliable and you haven't had to deal with that?
Well, a bit of both, actually. I think we have a great relationship. We use 3 movers, and we have fabulous relationships with them, and we deal with the owner of each of the companies. But I would say that last year was a challenging year, not just because of COVID, but also because of visa restrictions. So, it was really difficult for the movers because we, as I said, we don't like day trader, day workers on jobs. We have to make sure that everybody that's on a team has a background check, so you know who's coming into your home. So we did have to do a little bit more strategic planning to make sure that there was availability, but that you can never start too early. And if you start a little bit later, we'll figure it out for you.
Great. And Collin, what have you seen as the most common unexpected issue that you've been troubleshooting during COVID, and how do you suggest that your buyer or seller clients prepare for it?
I would say one of the issues that's very unexpected and new is inspectional items. And you touched on that briefly with contingencies and people in multiple bids sometimes waiving those contingencies. Even buyers that have had a traditional home inspection contingency, we've had lack of access in the city through buildings and units. If it's not a single family or it's not a townhome, where you have access to both the basement to check water pipes, sewer pipes coming in from City of Boston, and also access to a roof. If you are relegated to permission from someone in a building who owns the penthouse unit, they're refusing, sometimes during times of COVID, which you don't think about until you're in the moment and you reach out to the condo association or a trustee to request permission to get to the roof, and they say absolutely not. No one's coming through my unit. And then you go back to the buyer and to their representative or to the home inspector and say, I'm terribly sorry, but we won't have access to the roof. Owners are in residence. They don't want people traipsing through. Even when we offer booty covers or take off shoes and wear gloves and no one will touch anything, people sometimes still don't want other people in their space, especially strangers. So we have to do a little more due diligence, which I know is a big word and a phrase in your world of legalities. But then we have to dive a little deeper into the trustees or the documents for the condominium association. When was the last time the roof was replaced? Are there any meeting minutes that reference the last time it was repaired? What's the condition? And we have to rely a little bit upon transparency through the association, or if it's a self-managed association, the current owner occupants to tell us what's going on. Especially last week, we had 2 inspections and we could get to the roof, but it was under 6 or 8 inches of snow. So you can't see anyway. It's just interesting. I think that's one of the things to come out of COVID and pandemic that you don't realize in trying to vet a property is if someone lives in the basement and that's the door that accesses the systems room with the boiler, they may not grant permission and buyers get frustrated, but there's nothing we can do.
Right. And Nora, I know you mentioned briefly at the top of your presentation how putting aside all the impeachment noise and noise in the sense of looking at it on an economic basis, not in the sense of whether it's valid or not, but putting the noise of the impeachment and the GameStop. Well, you know, you're certainly, I'm no expert, but I do know that the stock market is a very sensitive being, and a lot of people react to a lot of the noise, even if it's substantially, if we see, as you mentioned, that the third quarter of 2021, it seems like we're going to be back in pre-pandemic times. So how do you explain that to your client, that this really is just a sort of a news flash right now?
Yeah, so it's just crucial for one thing, it's a reminder of why you need to diversify, right? Not have all your eggs in one basket, be it GameStop or one sector of the market or all real estate or all stock market. So that way you can ride those waves and have more predictable, consistent returns over time and not ride the wave quite so much. And it's also important to take stock and look in the mirror, especially back in March, and be honest with yourself of if you are too risky, if you are way too risky for what you can emotionally stomach. And it may be time to get off that roller coaster a bit and get to a more conservative position overall with your investments. And I always say, whether it's a good market or bad market, a good plan stands the test of time. So you should be bulletproof no matter what comes your way or what comes our way in the economy.
But you're saying that the fundamentals are still there for a nice recovery, which from based off of what you're seeing.
Yes, exactly. And when it comes to politics, don't let how you feel about politics dictate how you feel about investing.
That's very sound advice. That's very sound advice. Any other questions? Oh, John, okay. Can you unmute yourself? I'll ask you to unmute. There you go.
Yep, all set. Thank you. Thank you, Noel. This probably is for Collin, but I'm not really sure. And maybe it's for you, because George was supposed to ask you this question, and given the lack of proximity between you and George, temporarily he may have forgotten. I have a new client for me who is from Saudi Arabia. He's a senior official at King Saud Medical Center. And he wants to buy a condominium in Boston, which I've identified a couple good possibilities. His daughter is going to be a resident at the Tufts Dental School. Anyway, he's a foreign national. He has no US based income. And I am scrabbling around trying to find a financial institution which will lend him money. And basically they all say, doesn't really matter how much money he has in Saudi Arabia, unless he's paying cash, of course. But unless he's got income in this country, or at least has a green card, or and this fellow actually was in this country for a number of years. He got his PhD at Michigan. His daughter, who will be living here in the unit, is a U.S. citizen. But another revelation to me was that if you are a resident at dental school, not only don't you get paid like you do if you're an MD as a resident, you pay $100,000 each year to be a resident. So my question, I guess, is a long-winded question. I've had a few people give me a few places they thought I might be able to find some money. HBSC was one, Citibank was another, but I haven't seen any who can actually point me towards the right place.
Yes, John. So I actually did connect with George on this and did send a link over to him. Before 9/11, lending to foreign nationals was more common. 9/11 hit and the banking industry really pulled that program back, made it a lot more difficult. A lot of the players just got out of the game completely. There are some lenders out there that still lend. Certain lenders tend to focus in certain areas. So there's one bank, I think Cathay Bank, really focuses on clients from Asia. And there's some other banks that, of which I sent George one of the links, that do lend to foreign nationals. It is at a higher rate. It is a process. The loan to values are not as favorable, of course. You know, the idea is that the lender's taking a risk, so therefore they're going to buffer that risk by giving you some 50% loan to value or something to that effect, and rates that are significantly over what a normal U.S. citizen could get in the market. The process also takes a lot longer because all documents that come from foreign countries, first you have to get them, then you have to get them translated. And then once they're translated and reviewed by underwriting, they usually request further documentation, which has to be obtained and translated and reviewed. And so the process to approve a foreign buyer is significantly longer, not by a little, not by a week, but significantly longer. There's also certain countries that are harder to get approval with than others for
my thought that was, at least where even though I'm not in agreement with it, we had for some period of time something of a détente between the US and Saudi Arabia because we sell them $68 billion worth of fighter jets every year. It appears that there's going to, under the new administration, we're going to take a more rational approach to countries who abuse their citizens, let's call it that, maybe. And that maybe it might cause some problems between Saudi nationals and US-based institutions, where if for some reason something happens, somebody drops the hammer and says, you know what, you can't, like what happened in China. You can't get any money out of China. If you own real estate in Beijing, as a friend of mine does, you can't sell your house if you're an American, and you can't take money out of a Chinese bank.
Yeah, international issues are very interesting. We have a big international client base, and we deal with them often, and including, as a foreign national, when you buy here, having to, when you purchase, plan for the FRIPTA withholdings, which is 15% of the gross profit being withheld until your taxes are paid. So figuring out the best entity in which to hold the property and planning for that future sale, which should really happen on the purchase. There's all sorts of types of issues. And so, John, I had definitely forwarded a link to George of one lender, The other
Okay.
is one of our guests here sent me a private message that she also has a lender that she could recommend.
Oh, great.
So what I will do is I will connect you offline about that, and hopefully we can help your client out.
That's
John, another
fantastic.
idea too is
Yeah.
if there's a brokerage account, you can take a line of credit off the brokerage account, which counts as collateral, and that way the
Yeah.
interest rate is lower. Right now they're between 2% and 3%, and they lock in if you borrow generally over $75,000.
Thank you, Nora. That was actually a suggestion I had also to, because they had some accounts at one point with some banks to open, example, something with Fidelity here or some other brokerage account that they might be able to leverage that, one way. And that often, a quick question, Eve, did you, in your term with Fidelity in the Far East, a good friend of mine was head of Fidelity Far East, actually found Roger Servison. Was he head of that?
I do, yes. He was on the investments. I was on the worldwide side, but yes, I know of him for sure. Yes, absolutely. Who doesn't? Yeah.
Yeah, he's a
He was
very,
in Japan.
very bright guy
Yes.
who was still is at the very top end of the Johnson chain, so to speak, at Fidelity. So another brief comment for Collin. My grandson's name is Conlin.
Like it.
First name. And as far as, and it's my wife's maiden name, it's the only, supposedly there's one other person in America whose first name is Conlin.
I like it.
Not to be confused with Collin.
Right. John, I'll just quickly tag on to everything that Noel and Nora have told you. And it is more expensive. What Noel mentioned after 9/11, I think she's referring to the Patriot Act, right, which came into play for non-US nationals. I've had several foreign investors and clients try to buy it, and it is really strategic. It is painfully slow. There are a few local lenders that will do what I'm sure you're familiar with is referred to as portfolio loans.
Yes.
Much higher down payment, much higher loan to value, much higher interest rate. They will do them with established banking relationships like a Fidelity or First Republic. I think Boston Private has really backed down from a lot of that. Wellesley Bank used to be a little higher on the risk taking. Now that they've been bought out by Cambridge Trust, I'm not sure what their level of tolerance is for that. But definitely portfolio loans, and just anticipate months and months of documentation. Right. Once they send it in duplicate and triplicate, they'll ask for it one more time.
I had the temerity to ask what I thought was a fairly simple but blunt question. Since my client, whom I've never met in person, was described as a man of some means, I said, well, why don't you just pay cash? Don't take a mortgage. It's about $1 million. You should be able to pay cash, and that met with a wall of silence. So maybe it wasn't a good question to ask.
Well, because a lot of the foreign clients right now that I'm aware of from many places in the world, they want to take advantage of our unbelievably low interest rates. Yes. and hang on to their.
Oh, agreed. Yeah, they can't do anything like that in Saudi Arabia. That's for sure.
Right. And they
can't pay any interest at all, first of all.
And it's part of, they want to benefit from the American system, and there are sort of stopgaps in place that I think, without going into too much detail and politicizing the world of financing, to make sure that a lot of foreign nationals don't come in and get 3% rates and buy up our terra firma.
Right.
Right. Well, thank you. I appreciate all the input and feedback from everybody, and hopefully I can pull this off. So,
wishing you luck, John.
Thank you.
Well, if there are no further questions, we've been talking for about just a little over an hour now, so I'll let everyone get back to your day. Thank you for joining. We hope it was informative and useful, and we are all here as a resource to you, so please don't hesitate to reach out. If for whatever reason you need our contact information, I sent you the Zoom link, so don't hesitate to reach back out to me, and I can always connect you to the other panelists. but enjoy the rest of your day. And here's to spring that's around the corner.
Thanks,
Yes,
Noel.
thank
Feel
you,
like it.
Noel.
Bye.
Thank
Thank
you,
you.
everybody. It was
Bye.
wonderful. Bye.
Thank you. Bye.
Bye.